investor's perspective on all of this. Sadiq Adatia joining us, Chief Investment Officer of BMO Global Asset Management. Nice to see you.
Thanks for having me.
So investors get their hats back on and get back to work here after a long weekend. And the same old story of where the economy goes from here seems to be front and center. Does that surprise you?
No, it doesn't. I think everybody's waiting to see what goes on with the central banks on interest rates, how GDP continues to play out. And you alluded to the housing market. I think it's an important component that people are actually forgetting about, both in Canada and the U.S., because consumers really feel how wealthy they are based off their housing valuations.
And so I guess that sets us up. We've got this Bank of Canada decision tomorrow. Any guesses on what the bank might do?
Yeah, I think the Bank of Canada is actually done. So not only done for this particular month, but done now going forward. We've seen the weakness now coming through on GDP numbers. You alluded to the technical recession potentially here. We're seeing some softness even in the employment numbers. I think all the work that the Bank of Canada has done in raising interest rates has now filtered into the economy, and we'll still see more of that playing out, which will continue to put softness on the housing market and softness on the consumer. And that's a little bit different than what we would see in the U.S., right? Where the U.S., I think, still has room potentially to go higher still on interest rates because the economy is still much hotter there. Employment is still relatively strong, even though we're seeing some weakness in some of the more recent numbers. So there's a little difference between Canada and the U.S. And of course, Canadian consumers have a lot more debt. So that higher interest rate is impacting them a lot more than the U.S.
And if Canada maybe goes its own way versus the U.S., at least in the near term, how do they message around that, especially since central banks everywhere have been so vocal about getting to the end of this fight in inflation? If the narrative in the U.S. is still about the fight against inflation and it changes a little here in Canada, how do they speak to that?
Well, I mean, remember, Canada went a lot faster than the U.S. earlier on, right? And the U.S. has played catch-up. Now, the difference there is because they went slower earlier on, their economy stayed hotter a bit longer than Canada has. So I think Canada actually did the right thing by going faster. And now Canada can take a little breather coming through. I think they have to highlight that the consumer is a bigger part in Canada than it is in the U.S. And that impact of higher interest rates is going to impact consumer spending a lot faster here than it is because of the higher debt levels. So they're being a little bit more cautious coming through. I think also on the inflation front, we fought inflation faster as well, too. So therefore, when you compare the two economies, it makes sense for Canada to pause, U.S. not to quite yet. But I'm not saying they won't pause like fully forever. I do think that right now they need to still be data dependent and can't commit to being stopping. Yeah,
because the idea of an economy that is weakening and the Bank of Canada, in your opinion, maybe being at the end of the rate hiking cycle doesn't necessarily mean that we are gearing up for rate cuts, correct?
That's exactly right. I think the U.S. still has a full year, if not longer than that, before they get into the rate cutting cycle. Canada, I think, on the other end, has a possibility in 2024 to cut rates because, again, I think it will need to spur the economy at some point, whether that's the later part of 2024 or maybe slightly earlier than that even.
So let's talk about some of the lingering inflation considerations. You know, a lot of people have been highlighting what's going on with oil recently, for example, making a bit of a comeback and just all these whack-a-mole components to price pressures. Actually, this morning, it's interesting, Sadiq, while we were talking, WTI surged, or now up close to 2% after Russia said it will extend production cuts, extending them to 300,000 barrels a day. The Deputy Prime Minister making those comments and the market immediately reacting to that. There's been a growing conversation around inventory, the supply picture versus what had been a narrative working against oil, which was the demand story, you know, maybe China having less of an appetite, et cetera. But what do you make of those headlines?
Yeah, so I think this is an important one because if you think about what's been going on with the energy market, it's been driven initially by, the recession fears that demand was not going to be strong enough, and therefore oil prices took a bit of a hit earlier on this year. Now, our view is that what should really drive oil prices is more the demand than it is the supply side. And the rationale for that is you can always turn on and off the supply side. The demand, though, depends on the economy. And right now, I think people overestimated how much demand would come off because of the worry that recession was going to be much stronger and much longer lasting. So that part, to me, has been underestimated. We should have more demand than people are expecting. And the supply side, you've seen Saudi Arabia and others, Russia as well, are curtailing that input of supply coming into the marketplace so they can control oil prices to be in that 80 to 90, maybe even a little bit more than that range, where it's kind of where we're at today. So to me, don't get too caught up by the supply cuts because those are generally temporary. To me, it's the demand side that's got to be the one that drives oil prices higher. And we've been optimistic about oil, for the last 2 years or so. Maybe a period of time there we were a bit more pessimistic when everybody got more overly excited about it. But I do think there's still runway here on energy names and oil prices to go even higher, even though we're somewhere in that range at the moment.
Okay.